On February 2, 2025, significant news broke regarding Elon Musk's Department of Government Efficiency DOGE, which resulted in a 25% surge in the value of Dogecoin DOGE. Reports indicated that DOGE had gained access to sensitive U.S. Treasury data, including crucial payment systems related to Social Security and Medicare. This revelation prompted immediate concerns regarding privacy and the potential misuse of taxpayer information.
Timeline of events.
1. Initial reports. February 2, 2025, the Associated Press reported that DOGE task force led by Musk had acquired access to vital Treasury data. The group's mission was to streamline government operations by reducing federal jobs and regulations. The New York Times was the first to disclose this access, escalating scrutiny from lawmakers and advocacy groups. 2. Concerns raised. February 2 to 3, 2025, Senator Ron Wyden, a prominent member of the Senate Finance Committee, voiced his alarm over the implications of this access. He sent a letter to Treasury Secretary Scott Bessent urging caution against potential manipulation of payment systems for political purposes. Wyden emphasized the critical nature of these payment systems, warning that any politically motivated interference could pose severe risks to the economy. 3. Official resignations. In the wake of these revelations, David Lebryk, the acting Deputy Secretary of the Treasury, resigned after over 3 decades in the role. His resignation was reportedly linked to Musk's DOGE request for sensitive data, although Lebryk's resignation letter did not explicitly mention DOGE. 4. Legal actions. Advocacy groups including Public Citizen and the Service Employees International Union initiated a lawsuit against the Treasury Department. They argued that the data sharing arrangement was illegal and violated individuals' privacy rights, asserting that citizens should not have to share information with private entities like Musk's DOGE. 5. Musk's claims. In response to the backlash Musk took to social media, claiming that his team had uncovered systemic issues within Treasury's payment approval processes. He alleged that payments were routinely approved without scrutiny, even for fraudulent entities, stating that approval officers had never denied a payment in their careers. However, Musk did not provide any evidence to support these assertions. Key points and commonalities. Access to sensitive data. All reports confirmed that DOGE had gained access to critical U.S. Treasury data, raising alarm bells about privacy and the potential for misuse. Political and legal reactions. There was widespread concern among lawmakers and advocacy groups, with calls for accountability and legal action against what many viewed as an unprecedented intrusion into personal data. Resignation of Treasury officials. The resignation of David Lebryk was a consistent theme across reports, indicating internal turmoil at the Treasury in response to the DOGE situation. Differences between sources. While sources like the Associated Press and CBS News focused on the implications of the access and the legal ramifications, Forbes's coverage suggested a more radical critique of the situation, calling for urgent intervention against Musk's actions. The level of detail regarding Musk's claims varied, with some outlets providing a contextual background while noting the lack of evidence for his assertions. In summary, the surge in DOGE's value is intricately linked to the controversial actions of Musk's DOGE task force, which have ignited significant concerns about privacy, governmental oversight, and the intersection of private enterprise with federal operations. As the situation evolves, ongoing scrutiny from lawmakers and advocacy groups is expected to persist. The surge of Dogecoin DOGE by 25% in the wake of Elon Musk's Department of Government Efficiency DOGE gaining access to sensitive U.S. Treasury data presents several counterintuitive points. 1. Market reaction to controversy. Typically, one might expect that a controversy involving potential misuse of sensitive government data would lead to a decline in a cryptocurrency's value. However, the immediate reaction was a significant increase in DOGE's price. This suggests that investors may perceive Musk's actions as a sign of legitimacy or potential for future gains despite the surrounding legal and ethical concerns. 2. Public concern versus market optimism. While lawmakers and advocacy groups are expressing alarm over privacy violations and the potential for misuse of taxpayer information, The market has responded favorably to the news. This dichotomy highlights a counterintuitive aspect of investor behavior, that potential profits can overshadow ethical concerns for many traders in the cryptocurrency market. 3. Resignation of officials. The resignation of Treasury officials, particularly David Lebryk, due to the DOGE access could be interpreted as a sign of instability and risk.
Traditionally, such instability would deter investment.
Yet in this case it seems to have had the opposite effect, enhancing the speculative allure of DOGE. For Musk's claims of systemic issues, Musk's assertion that Treasury payment approval officers were instructed to approve payments without scrutiny is a serious allegation.
One would expect that such claims lacking substantiation would lead to skepticism.
However, instead they appear to have fueled interest in DOGE, as investors may be betting on Musk's ability to enact changes that could reshape financial systems. 5. Legal challenges. As a catalyst, legal actions against the Treasury Department for the data sharing arrangement could be seen as a negative development. Despite this, the prospect of legal battles often generates volatility that traders may exploit for profit. This suggests a counterintuitive relationship where challenges and risks may serve as catalysts for investment rather than deterrents. 6. Public trust in Musk. The willingness of many investors to overlook the potential for abuse of power and privacy violations associated with Musk's DOGE initiative highlights a broader cultural phenomenon. Musk, known for his innovative spirit and high-profile ventures, seems to maintain a level of public trust that allows him to navigate ethically ambiguous waters without significant backlash from investors.
7. Interplay of politics and cryptocurrency. The intertwining of political maneuvers with cryptocurrency investment strategies presents a counterintuitive dynamic.
While cryptocurrencies are often viewed as decentralized and beyond governmental control, Musk's actions suggest that political engagement can still heavily influence their market performance. In conclusion, the response to Elon Musk's controversial access to U.S. Treasury data illustrates a complex interplay between market behavior, public sentiment, and individual trust in high-profile figures. These counterintuitive observations reveal that in the realm of cryptocurrency, ethical concerns, legal challenges, and political developments may not always align with expected market reactions. The report detailing Elon Musk's Department of Government Efficiency DOGE gaining access to sensitive U.S. Treasury data encompasses several critical elements that are significant yet may be overlooked by many readers. Below, I identify these overlooked aspects and explain their importance in the broader context of governance, privacy, and the potential ramifications for public trust in government operations.
1. Access to sensitive data.
One of the most crucial points that many might gloss over is the extent of the access that DOGE has gained to sensitive U.S. Treasury data, specifically payment systems related to Social Security and Medicare. This access raises profound concerns about privacy and data security. The implications of allowing a private entity, even one led by a high-profile figure like Musk, to interface directly with government payment systems could lead to manipulations or misuse of data. Significance. This situation highlights the fragility of privacy protections in government data sharing arrangements. The potential for misuse of taxpayer information, especially in politically charged environments, poses risks not only to individual privacy but also to the integrity of vital public services.
With increasing reliance on digital systems, the safeguarding of such sensitive data is paramount. 2. Political manipulation concerns. Senator Ron Wyden's alarm over the possibility that DOGE could manipulate payment systems for political gain is particularly significant. His concerns point to the potential for political interference in essential services, which could translate into real-world consequences for millions of Americans who rely on these programs. Significance. This issue underscores a potential erosion of the separation between private interests and public service. The fear of political favoritism or discrimination in the allocation of federal funds could lead to a loss of public trust in government institutions. It also raises questions about the ethical implications of private individuals or entities influencing government operations. 3. Legal and advocacy responses. The lawsuit filed by advocacy groups against the Treasury Department for the alleged illegal data sharing arrangement is another critical element that may not receive adequate attention. The complaint emphasizes that individuals sharing information with the government should not have to also share it with private entities like Musk's DOGE. Significance: this legal action is emblematic of broader societal concerns about surveillance and privacy rights. It reflects a growing movement among citizens and organizations advocating for stronger privacy protections and accountability in data handling by both public and private sectors. The outcome of this lawsuit could set significant precedents regarding data privacy and governmental transparency. 4. Resignation of Treasury officials. The resignation of David Lebryk, the acting Deputy Secretary of the Treasury following the revelations about DOGE's access to sensitive data, is a noteworthy event that may be overshadowed by the main story. His departure after over 3 decades of service indicates a profound internal crisis within the Treasury. Significance: Lebryk's resignation signals potential instability within one of the most critical departments of the U.S. government. It raises questions about the morale and integrity of public service officials when faced with pressures from private interests. Such resignations can lead to a perception of dysfunction within government agencies, further eroding public trust. 5. Musk's unsubstantiated claims. Musk's assertions on social media about discovering systemic issues within the Treasury's payment approval processes are significant not only for their content but also for the manner of their delivery. His claims lack evidence and are presented without formal investigation or oversight. Significance: this situation illustrates the potential dangers of allowing influential figures to wield power without accountability. The spread of unverified claims can exacerbate misinformation, leading to public panic or misplaced policy responses. It highlights the importance of evidence-based discourse in governance, particularly when it involves sensitive public functions. 6. Broader implications for government oversight. The entire episode raises broader questions about the oversight of government functions and the interplay between public and private sectors. The DOGE initiative aimed at streamlining government operations could potentially bring about efficiencies. But at what cost? Significance: this situation invites a re-evaluation of how government partnerships with private entities are structured and regulated. It emphasizes the necessity for clear boundaries and accountability mechanisms to prevent conflicts of interest and safeguard public interests. As government operations increasingly intersect with private sector innovations, the importance of maintaining ethical standards becomes ever more critical. Conclusion. In conclusion, while the immediate story revolves around the surge in Dogecoin's value linked to Musk's revelations and the ensuing controversies, the underlying issues related to privacy rights, political manipulation, legal accountability, and the integrity of public institutions are the more significant takeaways. These elements not only impact current governance but also set the stage for future interactions between public entities and private interests, ultimately affecting the trust that citizens place in their government. As this situation develops, it will be crucial to monitor how these concerns are addressed and what implications they may have for the relationship between government and private sector engagements. 1. Access to sensitive data. The acquisition of sensitive U.S. Treasury data by Elon Musk's Department of Government Efficiency DOGE is a critical point of concern. This access includes payment systems for Social Security and Medicare, which raises significant privacy issues and fears regarding the potential misuse of taxpayer information. The implications of such access, especially under the leadership of a private individual like Musk, could lead to unprecedented levels of government intrusion into personal financial matters. This situation necessitates a thorough examination of the legal frameworks governing data access and privacy rights. 2. Political and legal reactions. The political fallout from this development has been swift and severe. Lawmakers, particularly Senator Ron Wyden, have voiced strong objections, suggesting that the access could enable politically motivated manipulation of essential payment systems.
Advocacy groups have also initiated legal action against the Treasury Department, arguing that the data sharing arrangement violates privacy rights and federal law. This response illustrates the intense scrutiny and potential ramifications for the administration's actions, indicating a broader concern over government accountability and the blurred lines between public service and private interests. 3. Resignation of Treasury officials. The resignation of David Lebryk, the acting Deputy Secretary of the Treasury, signals significant internal unrest within the Treasury Department. His departure, closely tied to the request for data access by DOGE, underscores the gravity of the situation and the ethical dilemmas faced by public officials when private entities gain undue influence over government operations. This incident raises critical questions about the integrity of federal institutions and the potential consequences of intertwining private enterprise with government functions. For Elon Musk's claims and accountability. Elon Musk's assertions regarding systemic issues within the Treasury's payment approval processes, particularly his claims about payments being approved without scrutiny, remain unsubstantiated by evidence. This lack of transparency raises concerns about accountability, especially in a scenario where a private individual wields considerable power over government data and operations. Musk's statements also highlight the risks associated with promoting radical reforms without a solid evidential basis, potentially undermining public trust in both governmental institutions and private initiatives aimed at reform. These key points collectively underscore the complexities of this situation, emphasizing the need for rigorous analysis and discussion about the intersection of private enterprise and public governance, the integrity of data privacy, and the potential implications for the future of governmental operations. 1. Watergate Scandal 1972 to 1974. The Watergate scandal is one of the most infamous political scandals in U.S. history, involving a break-in at the Democratic National Committee headquarters and the subsequent cover-up by members of the Nixon administration. The scandal led to significant political turmoil, with President Richard Nixon resigning in 1974 to avoid impeachment. Concerns over the abuse of power, privacy violations, and the integrity of government institutions were central themes, similar to the apprehensions raised by the DOGE task force's access to sensitive Treasury data. 2. The Enron Scandal 2001. Enron Corporation was a major American energy company that engaged in widespread accounting fraud, leading to its bankruptcy in 2001. The scandal resulted in thousands of employees losing their jobs and savings, and it raised serious questions about corporate governance, regulatory oversight, and ethical business practices. The manipulation of financial data and improper access to sensitive information parallels the concerns surrounding Elon Musk's DOGE gaining access to U.S. Treasury payment systems and the potential for misuse of taxpayer data. 3. Cambridge Analytica Scandal 2016. The Cambridge Analytica scandal involved the unauthorized harvesting of personal data from millions of Facebook users to influence voter behavior in political campaigns. This incident highlighted significant issues regarding data privacy, consent, and the intersection of technology and politics. The legal and ethical implications of data sharing without explicit consent resonate with the public outcry and legal actions taken against the DOGE task force's access to private taxpayer information, raising alarms about privacy and the potential for political manipulation. The recent surge of Dogecoin Doge by 25% following revelations about Elon Musk's Department of Government Efficiency Doge gaining access to sensitive U.S. Treasury data has sparked significant debate and concern. As this scenario unfolds, several predictions can be made regarding the future of Dogecoin, the implications of Musk's actions, and the broader landscape of cryptocurrency and government interaction. Predictions for Dogecoin's future. 1. Increased volatility. The immediate reaction to Musk's revelations indicates that Doge is likely to experience heightened volatility. The surge in price is a direct response to speculative trading rather than fundamental changes in the underlying asset. This volatility may attract both retail and institutional investors looking for short-term gains, leading to rapid price fluctuations. 2. Potential regulatory scrutiny. the controversy surrounding the access to sensitive Treasury data is likely to attract regulatory scrutiny from various government bodies.
Lawmakers may introduce new regulations that could impact how cryptocurrencies operate, especially in relation to data privacy and security.
This scrutiny could lead to a more stable regulatory environment in the long run, but it may also introduce uncertainty in the short term. 3. Integration with traditional finance. As Musk's DOGE seeks to streamline government operations, there may be a push towards integrating cryptocurrencies with traditional financial systems. If successful, this could enhance the legitimacy of DOGE and other cryptocurrencies, potentially leading to broader acceptance in mainstream finance. 4. Market influence of Elon Musk. Musk's influence on the cryptocurrency market is undeniable.
His statements and actions often lead to significant price movements. As such,
any new initiatives or comments from Musk regarding DOGE could lead to similar surges or declines in its value. The market may become increasingly reliant on Musk's public persona, leading to a culture of speculation.
5. Expansion of use cases. Should DOGE successfully navigate the current political landscape, there could be an expansion of its use cases. This might include partnerships with government entities or services that leverage cryptocurrency for efficiency.
However, this would require a careful approach to ensure compliance with regulations and public trust.
Broader implications for cryptocurrency and government interaction. 1. Shift in public trust. The public's trust in governmental use of cryptocurrency could waver, especially if privacy concerns are not adequately addressed. Advocacy groups have already filed lawsuits to protect individual privacy rights.
And the outcomes of these legal battles could shape public perception of both the government and cryptocurrencies. 2. Technological innovation. The intersection of cryptocurrency and government operations may spur technological innovations aimed at enhancing security and efficiency in payment systems.
Blockchain technology could be leveraged to create more transparent and secure payment methods within government programs.
This could set a precedent for other nations exploring similar technologies. 3. Political mobilization. The current situation may lead to increased political mobilization around issues of privacy, data sharing, and the role of private entities in government operations. Advocacy groups and concerned citizens may push for stronger regulations that protect individual rights, which could reshape the regulatory landscape for cryptocurrencies. 4. Emergence of new cryptocurrencies. In response to the current controversies, new cryptocurrencies with a focus on privacy, security,
and ethical governance may emerge.
These could gain traction among users who are wary of government overreach and seek alternatives that prioritize personal privacy.
5. The global trends in cryptocurrency regulation. The U.S. response to this situation could influence global trends in cryptocurrency regulation.
Other countries may look to the U.S. as a model for how to manage the intersection of cryptocurrency and government operations, leading to a more cohesive international regulatory framework.
Conclusion. The future outlook for Dogecoin and the broader cryptocurrency landscape is filled with uncertainty and potential. The surge in Doge's value propelled by Elon Musk's controversial actions has set the stage for increased volatility, regulatory scrutiny, and evolving use cases.
As the situation unfolds, stakeholders in both the cryptocurrency and governmental spheres will need to navigate the complexities of privacy, trust, and innovation.
The responses from regulators, the public,
and the market will ultimately shape the trajectory of Dogecoin and its role in the future of finance.